Well, since we spoke last time, things are really changing here on the grain trade. I'm Marlon Bowling with you, your tour guide to these ag commodities. I've been watching with interest here the last 20 minutes or so, and things have really kind of come off the rails, as they say sometimes. Now, I want to take a look. We'll start with the corn market here, and our quotes provided by Bar Chart. And the corn market really does not look all that bad. Let's go to the big board here. On the corn, the nearby May, well, it is now down 5 1/4. A little bit ago, it was actually like a tick or so higher, but it's starting to get weak in the knees, and you'll see why here in a minute. The May contract on the corn down 4 3/4 now at 625 1/4. And believe it or not, that's come back a couple of cents from its low a little bit ago. We now have December new crop corn down 8 3/4. It has dropped down below $5.50. I know we've been watching that with very high interest here for quite some time to see if that could hold. It has given up here this morning. So now 547 3/4. There's another new low for the day, down 9 on the new crop corn. This is against the backdrop of we had a new overnight sale of corn. USDA announced that before we opened, and gosh, it doesn't seem to save the day at all when it comes to the market here. It was 178,000 tons of corn sold to China, and that's 6 out of 7 days now, and yet here we have this kind of market action. From what I understand, the large funds at the last Commitment of Traders report that we were able to get access to, sounds like they have really been lightening up on positions. Some analysts say that they are actually net short. Some say that we maybe have them at a net long position of maybe down to 40,000 contracts now or so. But anyway, they have really lightened up on positions. Now on soybeans, I understand that they are still running a net long position here, but man, they may be getting out today. Look at these prices. May soybeans down 21 1/4 at 14.45 3/4. Well, heck, that's a new low as we bring it up on the screen here. Overnight, we had a high of 14.72, and now we're almost 30 cents off of that now. We have the November new crop soybeans currently trading at 12.76 1/2, and that is down 19 3/4 cents. The high of the trade last night was only 12.99. It didn't even reach $13. So things looking kind of dire technically on the soybean market here this morning. When you look at the wheat, we go to Chicago, and man, somebody grabbed the fire extinguisher here. We have May Chicago wheat down 26 1/2 at 656 3/4, and July wheat there 24 1/2 lower. We're at 668. If you look at Kansas City wheat right now, the May contract there down 25 3/4. We're at 794 1/2. You know, we had been as high as 821 1/2 overnight, and now we blew out the 8 handle all across the Kansas City market this morning. Spring wheat trade, May down 16 at 829 3/4. We have Brian Hoops on the line. He's with Midwest Market Solutions. And Brian, this market here on the grain complex just looking very, very sick here today for some reason. Any idea what's going on and why?
Yeah, it's kind of a take no prisoners type of session, a risk off type of selling type day. Wheat futures plummeting here. Corn and soybeans kind of following suit, with corn getting support from that export sale of corn to China once again. That's the 6th sale out of the last 7 sessions. And you're even getting a lot of selling coming into the cattle and feeder cattle markets. So, it's the markets, I think, that are most vulnerable to sell off here is the ones that the Commitment of Traders report is showing us that the funds are still holding big longs, notably cattle and soybeans. Those ones, I think, are, and I think you probably should include meal in that market as well. Even though they have good, strong fundamentals as we perceive them, in this environment with interest rates rising, uncertainty about the banking industry, there seems to be just a willingness by the fund traders to step in and liquidate some long positions, kind of pare those positions down, and kind of ignore any other news or any other fundamental news.
Wow, it's kind of a debacle here today on the grain side. Tell you what, we'll come back in a moment and we'll see what's going on with the livestock trade. We talked about cattle kind of taking it on the chin here this morning, and we'll see if they still are when we come back. All right, we're talking with Brian Hoops of Midwest Market Solutions and observing some weird action in the ag commodity trade today. as somebody pulled the rug out from underneath the ag trade, at least on the grain side. Brian, let's take a look at our livestock markets and see if they're doing the same thing in livestock or not. Let's go to live cattle here, and our quotes are provided by Bar Chart. We have the April live cattle down $1.32. June live cattle down $1.45. We're at $154.70. So it seems like it's spilling over into this livestock complex here this morning. The feeders, with the corn market going down, you would think feeders would find support. Nope. We have April down $1.15. We're at $193.55, and May down $1.20 at $198.35. So it seems like they're all in unison here, selling all the ag commodities today. Lean hogs are lower across the board, but they're being led by the deferred contracts, which is a little weird too. May lean hogs down 47 cents at 84.22, but you have June, July, and August all over $1 weaker, and that's a little bit odd when you have that big of a move on only the deferred contracts. Brian, what does that mean?
Yeah, it's led by the deferred contracts, so that's kind of one positive, is that maybe some of these front month contracts are holding in relative to some of the back months. So I don't want to call it bull spreading, but it's maybe a one positive sign that at least it's not being led by the front months. But you have a lot of technical selling. You look at the continuation charts on the cattle market. We continue to trade and close well below like a 40 and 50-day moving average, which is attracting some of that fund selling. We've dipped our toes below that moving average a couple times in January and December, but to trade this many days below it, it hasn't happened since back in late September and early October. And so that is attracting a lot of fund selling. Normally you would think when corn is down 4 or 5 cents, feeders would find some support, and that's not been the case. It's more of a long liquidation type of session that is, weighing on just a host of ag commodities here today, but not so much gold, silver, or these other outside markets.
So do you think this is just a general fear of recession then, based on what the Fed says this afternoon?
I do think it's really tied partially to that and some of the fund trader mentality, that they are concerned about what's happening from an economic status, global economic status, and the fact that they're willing just to pare down some of these positions until we get better understanding of what these near-term fundamentals are going to be and how the interest rates are going to play out, and how the banking sector is going to play out through the nation and the world on that basis.
Well, it is a bit of a strange day here. It kind of caught me off guard the way the markets are acting here. But Brian, thank you for helping us figure out what's going on today. I appreciate the comments. Brian Hoops of Midwest Market Solutions this morning with us.